Good morning, Mark Soderberg, ADM Investor Services with your morning egg market update. Mostly lower trade across the egg space here overnight as prices just continue to react to yesterday's bearish USDA data. Record U.S. yields and higher than expected stocks will likely make upside price appreciation rather difficult to sustain here in the near term. Speculative traders, heavy sellers in both corn and beans yesterday. We had fun selling about 51,000 contracts of corn, cutting that or extending that short position now back out to about 57,000 contracts. Sold about 18,000 beans, cutting their long position to 44,000 contracts. Also sold about 6,000 contracts of wheat and soybean meal while buying a like amount of soybean oil. Well, we got the short position in wheat back out to about 107,000 contracts, 23,000 contracts in the meal, while the short position in oil, is now down to about 58,000 contracts. Drier outlook here in the U.S. plains, I think, does provide some underlying support for wheat prices. Also, by tomorrow, we are expected to hear a ruling from the U.S. Supreme Court on the legality of the Trump administration's use of tariffs. Maybe lending a little bit of support to wheat market. Ukraine's prime minister, they have reported that Russian drone strikes have impacted two vessels used for the transportation of agricultural goods. So a little bit more war premium perhaps. Spot crude oil, that is currently up $1.15 a barrel, stretching out to a 2-month high. U.S. dollar slightly higher, while U.S. stock indices are slightly lower. Corn prices right now down about 3 cents, with March trading near 4.18, reaching a fresh 5-month low. Not a whole lot of support on the charts until the 4.10 level, that is contract low. Near-term export demand, it should remain strong. However, increased competition from Argentina will, as harvest approaches here towards the end of the first quarter. The market will need to find a price level that keeps U.S. demand strong while also looking to restrict additional second crop corn acres in Brazil. Open interest in corn did jump 44,000 contracts on yesterday's price plunge. So I do look for prices to undercut that 410 level, possibly $4 by the end of the first quarter here if South American weather remains favorable. In beans, rebounding here a little bit, down 4 to 5 cents, holding near 10.45 here in the March contract, still holding above this month's low at 10.35. March meal down $2 to $3. There too, holding just above its recent low of 2.95. And oil, nice recovery here, up another 40 points. However, it is holding within yesterday's range. Bean oil likely drawing some support from strength in the with higher energy prices. Still looking for some confirmation of these large sales to China. Total purchases are believed to be around the 10 to 11 million metric tons, nearing that 12 million metric ton total. Sino Grain did successfully auction off 1.1 million metric tons of soybeans as they continue to free up storage space here with the U.S. beans arriving this quarter. I'm afraid yesterday's 3 million metric ton increase in South American production, which was all Brazil, is just the beginning of further increases, making it even the reduced USDA export forecast of 1.575 billion bushels a challenge. I do look for spot futures to dip down to 10.25 price range. In wheat, prices range from 3 higher in Minneapolis to 3 lower in Kansas City. Inside trade for both KC and Chicago overnight. Market seems to have taken the slightly higher than expected global production and stocks data in stride. Strong sales to end 2025 prompted ICAR to raise their Russian wheat export forecast 2.4 million metric tons to 46.5. USDA held theirs at 44. Look for wheat to outperform corn. I look for a spot March to get to a buck over spot corn prices. Thanks for listening, everyone. Have a great day.